Hey everybody, it's Wednesday, February 17th, 2021. Well, Americans, they decided to go on a shopping spree spending their stimulus checks. We're going to talk about that and show you how they're spending their money. But what an insane time to be alive. Just to recap some of the recent reports here, we've got rising home prices still, even amidst the worst unemployment since the Great Depression, with between 700 and 9,000 new unemployment filings each week. And the president went out and extended the foreclosure moratoriums now until June of this year. So it looks like the housing bubble, the air is not going to come out of that anytime soon unless something huge happens, some sort of unseen event, or maybe multiple bank failures. But aside from something crazy like that, it looks like the bubble is going to get bigger. We've got millions of people now in the cold, people without electricity, without heat. All right, but let's get into it here. Retail sales burst higher in January as consumers use stimulus checks to spend heavily. Right? It looks to me like a lot of people are using shopping as therapy. We know a lot of people are in the dumps right now, for lack of a better word. People are depressed because people are not traveling as much. They're not spending as much time with relatives. More people spending time alone. Right? A lot of the amusement parks are closed. A lot of people's favorite stores have closed down. So maybe people are choosing to shop more, and especially online shopping. Well, let's take a look. Retail sales jumped in January 5.3%, and it was ahead of the 1.2% that was expected. And the big move came right about the same time as consumers received their $600 stimulus checks, while the next set of checks are looking to be $1,400. Can you imagine what kind of retail spending surge we're going to see if the $1,400 stimulus checks do get sent out here? Every major category of spending, including food and drinking establishments, saw gains. So in many states, we're seeing food establishments, restaurants, and some of the nightlife reopen now, so people are going to go out and buy their $4, $5, $6, $8 drinks, whatever they cost now, out at your bar or nightclub. All right, and this is the American economy. Remember, it's about 70% consumption and a very small percent of actually manufacturing. So when people go out and get their buzz and drink and have dinner, that's considered a booming economy. And those are the type of activities that contribute to GDP. So when they roll up the numbers, think about this. The more people that go out and get drunk and fill their bellies and spend, basically that makes the economy look better. And that's the sad part of how the economy is viewed when you talk about GDP numbers and even employment numbers. It's mostly service sector. And it's swiping credit cards, and now add to it people spending their stimulus checks. Right? So it's kind of messed up that people going out getting drunk is viewed as economic growth. All right? And we talked about it in our last report. The United States has an epidemic of obesity, but I guess the way it's calculated, the fatter the people get, that's better for the economy, according to the official statisticians. But it is going to be better for the farmers. Remember the reports that the news reports that we did last summer, where farmers were dumping their food because the restaurant supply lines had basically broken with all the shutdowns of these restaurants, and in some cases farmers had to dump food because they did not have a place to take the food. And it wasn't like the food handouts were going to the farms to get the food, so the supply chains were broken. But at least now with the restaurants opening back up in many states, the farmers will have a much easier time, hopefully. All right, so I think most of us here agree that it's pretty sad the way the economy is viewed and what's considered economic growth. But the way it's being reported here out of some of these news outlets like CNBC, I guess you could just keep printing stimulus checks. People can go out and shop and spend money on food and drinks, and that's going to bring the economy out of the gutter. Right? Is that the truth, or is this whole way of viewing the economy one big scam? Does anyone really believe that this is a good economy? Right? With more people going out and blowing their money and shopping and eating and drinking, is this really a good economy? right? And how many of these jobs can actually get people out of debt for the long term, right? People working at restaurants, the retail sector, and we know that places like Amazon are taking a bigger and bigger chunk of the market share, and Amazon especially is looking to eliminate humans from their warehouse jobs with the robotics that we've reported on here. More robotics and automation, AI are taking human jobs, and in the background, while these numbers are being celebrated as the economy quote unquote recovering, the real economy continues to deteriorate, and you're going to see more people begging for stimulus checks on a more frequent basis. Still on the topic of debt, Yahoo Finance. Household debt climbs to a record amid surge in mortgages. So with all these hot housing numbers and the housing market being one of the bright spots of the economy and rising home prices, well, it's actually based on just people taking on more debt and more mortgages. And we talked just our last report, our housing bubble update, how the lending has gotten even looser. The ultra low credit scores, you can now get a loan with a 520 credit score, but a 580 credit score, and get only a 3.5% down payment with an FHA loan. And it's this type of lending that's continuing to fuel the housing market. And if we look going back to the fourth quarter 2019 at mortgage debt, well, Americans are taking on even more debt per quarter, not just the total being higher, but the amount per quarter is increasing, right? So we have the fourth quarter here, 2020, people took on more mortgage debt in that quarter more than all of the other quarters before that when you look back to the fourth quarter of 2019. All right, so think about that. Even with the stimulus checks and all the handouts, people are still getting further in debt on average. Not everybody. Some people are getting out of debt. And remember, the stimulus checks go out to people that are making up to $150,000, or couples rather, making up to $150,000. So a lot of these people are getting stimulus checks that are making up between $100,000 and $150,000. Households are just using the stimulus checks to pay down their debt. So while one half of the population is paying down debt, keeping out of debt and paying it down, the other half are getting further and further into debt. And this is part of the K-shaped recovery that we talked about here. All right, everybody, so continue to prepare. Remember, the markets go up until they don't, until the support gets pulled back. There's going to be something that jumps out of the shadows. There's going to be a monkey wrench that gets thrown into this financial system, into this monetary system, that's going to bring this whole thing down. Now, I don't know how close that is, but I do suspect that something is coming up very soon here in the next 6 months. Look at all our previous calls. We talked about starting in mid-December how you were going to start seeing just big things unfold. A lot of insane events have unfolded. Look at the Robinhood chaos, where the brokers got caught basically working for the hedge funds and basically tilting the game in favor of the hedge funds and basically selling out their clientele, selling out their users. And expect more big things to happen. In our next report, we're going to talk about some big things that are happening within the financial sector and corporate America that might open some eyes. So stay tuned for that one. If you like what we talk about here in this channel, please help out by subscribing. Channels like this usually don't get put at the top of the search engines. Stay well, stay safe, stay prepared. Bye for now.